Hello, everyone, and thank you for taking the time to review the real estate market analysis for Morgan Hill, California, for the month of August 2008. My name is Robert Whitelaw. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. This market analysis is presented to you by my company, Whitelaw & Sons Real Estate, serving all of the Silicon Valley area. Now let's go ahead and jump right into the numbers for August of 2008 for Morgan Hill. The first thing we'll look at, as we always do, is the inventory numbers. Now, as you can see, we've got a very clear change in our market starting in 2006 when compared to 2005. The good news is that we're not up turned. We're up 13.4%. That's a grand total of 38 more homes on the market now than compared to the same time last year, which gives us a total homes on the market of 322. So while it's definitely higher, the good news would be if I could say that it's down. The reality is that the market isn't getting dramatically worse at the pace we've seen in previous months. Now let's go ahead and take a look at the homes that were listed in the month of August of 2008. Now, the good news here is that it's not higher than last year. In fact, it's the exact number. 75 homes were listed in the month of August, both in August of 2007 and August of 2008. So that's good news, I think, for the market. You can see that we saw a pretty big increase in the number of homes added to the market in 2006. To really compare this, you'd have to go back to 2004 or 2003 for similar numbers on how market. That's good news for market in general and as far as we currently have. Let's look at sales next. Sales are actually up compared to the same time last year. They're up by 3.4%. Now, let's not get too excited about that because that actually boils down to just one more home sold in the month of August of 2008 than in the month of August of 2007. But at this point, I'll take what I can get. That gave us a total number of homes sold of 30 in the month of August in 2008. Now, if we go ahead and look at these numbers and work out that magic ratio that I'm always telling you about, and that's basically the ratio of the total inventory to the total homes sold. And there's two ways to think of this number. One, it's the number of months of inventory we have on hand, or it's the number of homes out there trying to get sold for every one home that does sell. Now, in this case, that number is 10.7. That's higher than we want it to be. It's best if it's around 5 or less. But the good news is it's down from the same time last year. Last month. Last month's ratio was 11.6. We're down to 10.73. So that relationship between the sales and the inventory numbers is actually getting better. So that's encouraging news for our market. Now let's go ahead and take a look at the same supply and demand numbers, this time just going back months. This is a great way to see some of the trends. Just to cover some of the short-term information, between July and August of 2008, inventory went down 1.2%. That's a total of 4 fewer homes in August than in July. The total number of homes that listed, we listed 13.8% fewer homes in August than we did in July. That's 12 fewer homes listed. And the total sales was up 7.1%, or 2 more homes sold in the month of August than sold in July. Now, that's all very good news. If we look at the same time period last year, between July and August, we saw really the same sort of inventory performance. We saw very, very similar type performance. But what's really interesting is to try and look at the trends of what came just before where we are now and what came just after. Now, this year, as far as inventory numbers are concerned, we saw a fairly gradual decrease in the inventory, which was very encouraging. Last year, we tended to see between May and August a general increase. Between May and August of this year, we've seen a general decrease. It was a little bit more erratic last year, but just the fact that we're seeing things going in a completely different direction are actually a little bit encouraging. Now, if we look at the sales numbers, just going back and seeing what led up to the sales numbers last year, if we look back to August, we can see it's about the same, but it was on par with the July previous, and then the June before that was actually a little higher. So this year we got a little bit of a higher June than we did last year. It's looking like we might be able to sustain a slightly longer sales period. It'll be interesting to see. Last year we finally saw our September. With the numbers we've been seeing now with the decreasing inventory, from a strictly just personal experience standpoint, I'm seeing a lot more buyers out there poking around. I think the low prices have really brought out people to seriously think about purchasing in today's market. Now let's go ahead and move on and take a look at the home price numbers. This is a particularly interesting chart because you'll notice that the median price for a home is higher than for a home. Now this is obviously the homes that have sold in August of 2008 compared to the same month, August, in previous years. We are down 19.0% for an average home price of $766,743. That's a dollar change of $180,289. What's interesting is the median was at $800,000, and that's a 1.2% reduction from the previous year for a total of $10,000. Why this is more interesting. It tends to indicate that there were more homes getting sold at that number represents the exact middle point of the dollar value of the home. So half of them were below that point and half of them were over that point. So we're seeing that the average price, when you just average it out over all the homes that are sold, tends to be lower, or that the average price is a little artificially low when compared to the total number of homes out there that sold. So half of the homes were above $800,000, half of the homes sold below $800,000. Usually you'll see this number below the average price, as we've seen in past months, but it just tells us there were a few more homes huddled up at the top end above the average price, over the average price, than in previous months. So that's kind of encouraging. And when reviewing this data, what I noted was that price really didn't seem to have days on market numbers. We'll see this, but the price didn't really seem to have a profound effect on the days on market. There was a pretty equal distribution of higher end homes and medium priced homes in those numbers. So we're seeing good activity at just about all levels, but we're definitely seeing a little bit more of a distribution of homes priced higher than the average than we've seen in previous months. Now, the highest priced home in Morgan Hill sold on Mission Avenida, and that sold for $1,480,000. List price of $1,635,000. Now, that was on the market for 130 days, and what's interesting to note about that home is it was a brand new home. It was new construction. New construction is a very difficult time in Morgan Hill. I think a lot of that had to do with the fact that many of the new homes that were built in Morgan Hill were sort of built with the old mentality, which was, first of all, the style choices were very cookie cutter, as we'd seen in the late 90s and early 2000 period, where a lot of these houses looked very much this. Maybe the outside brickwork or stonework was maybe a little bit different, but the big thing was you had a large house on a small lot with no yard. A lot of what I have seen is those homes just aren't selling. Now, this home didn't fall into that category. It had a better sized lot, so that might have played into it. But I think the biggest problem for builders right now is that they have a lot of homes that just don't look that attractive to buyers when they realize they can spend the same amount of money, get a home that's a little bit older, but have a whole lot more yard and just as much house. So it's kind of nice to see a new home sell. The lowest priced home was on Loma Chiquita Road, and that's a little bit up in the hills. It sold for $262,500, and it had listed for $365,000. So over a $100,000 drop in price, and particularly when it's priced at that price range. That must have been a tough thing for the seller to have to realize. It took 181 days for that home to get sold, but good news for them. Now we move on to the same home prices numbers for previous months. We can see there's a little fluctuation here. In fact, a lot of fluctuation. But let's go ahead and take a look at what we've gotten for a summer season. Now, we can, as far as prices are concerned, we've already looked at some of how the other numbers were affected by the summer season. As far as prices are concerned, as far as getting more money per month, we saw that June was a month that really just some higher priced homes sold. That increased average price there wasn't really a number saying that the average price of a home was up. Just for that particular month, the average price of the homes that sold was a lot higher. We had 2 or 3 a month that sold that were quite a bit more expensive than we see usually. In general, you can see the trend, though. Average prices heading down. This is the first month going all the way back for this year plus that we can see where our median price is higher than our average price. That's an interesting thing to note. Obviously, when you get more homes that are priced above the average price selling, that's kind of an interesting indicator. If we look back to June and July of last year leading up to August, we can see that we had extremely low median in August of that year. Not the same story here. If we sort of lower that June number because of the artificially high prices of homes that sold in that month, we can see we've been actually generally trending up a little bit. That's actually fairly good news. It'll be interesting to see if we get an extension of this year's season into September. I'm not really expecting that, but it'll be interesting to see if that actually happens. All in all, we've actually had a pretty good season this year when compared to last year. I think that if we're not at the bottom, we're definitely within reaching distance of it. Now let's go ahead and take a look at the days to sell. Now this is the cumulative number. There's two numbers that get floated around out on the internet relating to the days on market, and it's a little deceptive. One is the cumulative days on market. The other is just the days on market, and the days on market can be a much smaller number. But the cumulative days on number keeps track of all those times and oftentimes that's done specifically to give people the impression it hasn't been on the market too long. I always use the cumulative number because I think it's much more realistic. Now, the days to sell between August of 2007 and August of 2008 increased by 15 days. That's a 10.1% increase. The lowest days on market was 11. The longest days on market was 527. Now, we had several homes that were up at the high end here, 400 and something days, 500 and something days, 300 and something days. What I like to do in this case is sort of break down for you into brackets the time frames for how long it took for these homes to sell. Now, often we'll get a home that sells in 0 days on market. Now, these are homes that sell before they ever even get entered into the MLS. Oftentimes, these are homes that real estate offices did not put on the MLS. They just sold it within their office and intentionally excluded the MLS from the marketing process. In those cases, they show up as 0 days. We had none of those in the month of August of 2008. And we also had 0 homes that sold in 1 to 7 days. We had 7 homes sell in 8 to 30 days. We had 4 homes sell in 31 to 60 days. And we had 1 home sell in 61 to 90 days. Now, by far, the greatest concentration of the homes that sold. Now, despite the fact we've got that 1 home at 527, that was not a rare occurrence in the month of August. We had a lot of homes that had been on the market for an extremely long period of time sell. We had 9 homes sold that had been on the market between 91 and 180 days. And we also had 9 homes that had been on the market for over 180 days. So clearly we are, and you know, I wouldn't take this as particularly bad news. Granted, statistically, we're still pretty high. The real number is probably around 90 days to 100 days if you're the average seller out there trying to get your home sold, and if you've got the right stuff in place to get your home marketed, if you're staged correctly, if at every stage of the buyer evaluating your property they've got a reason to come to you, then you're doing better. Now, a whole lot of that depends on your real estate person. If they're not doing their job, you're not going to get the attention you need to get sold. But having said that, we've got the good news here. But what I'm trying to get to is that this is actually a piece of good news, because we have once again had a month where homes that have been on the market for an extremely long period of time are finally selling, and that's really what we're seeing. We're seeing old inventory getting dumped by being sold, which is actually a great thing to have happening. It'll help with our inventory numbers. It'll help with the strength of the market in future months. Now let's go ahead and take a look at the days to sell just in past months. Again, you can see our 163 days right there on the right for August of 2008. And if you go all the way back to August of 2007, that was another month with some pretty high numbers of 148. And actually, I went back and checked, same sort of phenomenon there. We in the month of August, a few homes had been on the market for an extremely long time that finally got sold. We had a lot more of that this year than last year. But as you can see, the general trend was up from May to September of last year. With that one strange August, I would guess, since we're seeing the same sort of performance now, next month we probably won't see 163 days, but we'll probably see something in the neighborhood of 120 days, something in that ballpark. If using last year as a guideline, assuming that that's something that's valid for us to do. Now, the days to sell from July to August was up 45.5%. That's an increase of 51 days. And that's a very valid number. So the bottom line is that most of the homes that sold had been on the market for a very long time. Okay, now I appreciate y'all taking the time to listen to what I have to say on these market reports. If you would like to visit my website where I post my weekly podcast, my other real estate market analysis work, and also articles on real estate, you can find those at www.soldbyrobert.com. If you would like to email me please feel free to do so at robert@soldbyrobert.com. Also, you can reach me via phone at 408-852-0525. And if you'd like to contact me via any of the instant messaging programs provided by AOL, Google Talk, or Yahoo, the screen name is The Rebel Broker. Finally, if you use Skype, you can find me using the screen name Rebel Broker. Now, of course, referrals are always appreciated if you were in touch. And also, if anyone out there is interested in my REO and my foreclosure REO short sale list, I would be happy to share that with you. It's been something I've been doing for investors for actually quite a while, but I had a few folks call and ask me specifically about REOs and short sales, and I do generate a list on a weekly, and for some areas monthly, some areas weekly basis. So if you're interested in that type of a list, I can send it to you via PDF on a regular basis. Feel free to get in touch with me using any of the ways I've mentioned here to set that up, www.soldbyrobert.com. Thank you very much, and I look forward to talking to you all next time.